On this segment, we're going to take a look at JNUG, JNUG. This is the Junior Silver Mining Shares 3 times Velocity Direction, ETF. And the reason why we are taking a look at this is because we are using this instrument basically as a measure to trade the overnight positions in the gold market without margin. This is a security. It's traded dollars per share. It's called JNUG. Please be aware that this is a very volatile ETF and it should not be traded unless you are willing to take the risk. This should not be held for a long-term basis as much as a trading instrument short-term. And we just basically published the yearly report in the gold market, and based on the indicators that we're using to identify the yearly report in the gold market, it's given us an indication that we have a fairly sizable move coming up in the price of gold, which could be a generational move in many respects. And we want to manage our money and basically show you how to manage your money without the necessity of having to take the risk of margin when you're trading in the futures contract. So we allocate an X amount of money for this particular instrument, which closed on Friday at $17.93. And on this spreadsheet here, which is provided every week, gives you an idea of what the variable changing price momentum indicator is going to look like for next week, and it prepares us basically to take a look at the price action triggering levels where we can buy or we can sell. What we do is basically anticipate the levels of supply and demand for the following week. The levels in blue signify demand, and we identify 2 levels which are trigger points to buy. Buy 1 at 1703, rounding it off, and buy 2 level at 1612. When the market price comes down, if it does comes down to these levels, it is about an 80% probability that the price will revert back to the mean, in this case the green color VC code of 1871. If the price is reached at 1612, which is the B2 level, it is the extreme below the mean of 1871, and it has about a better than 90% probability that it will revert back to the mean or the average price of 1871. Closing above 1871, basically it activates the bullish trend in the market with a target of 1962 to 2130, which is the sell 2 level of supply. The red levels identify the potential levels of supply that could be imminent for the coming week. So when you subscribe basically to the service here, you have access to all this information a day, a week, a monthly ahead of time, because these numbers are prospective numbers that we use to trade ourselves. In addition to identify further the different components that we use in the VC price momentum indicator, we expand upon a written report in which we pretty much share with you transparently these indicators that we use. The weekly trend momentum indicator is the 9-day moving average that we use to identify the trend momentum in the market. And with JNUG closing on Friday at 1793, with the market closing below 1968, it's a little bit of an indication that we are dealing with a kind of a bearish market. Closing above 1968 would turn the market neutral to bullish. A close above 1968. So we have a pivot point that we can watch and we can monitor basically to identify the pivot points and turning points in the marketplace. The weekly price momentum indicator is basically the variable changing price momentum indicator that identifies for us the extremes of the supply and demand for the following day, for the following week, or the following year. In this case, we're doing a weekly report, so we're looking for the algorithm to identify for us the extreme of supply for this week above the average price of 1871. Okay, 1871 is the mean or the average price. And with the market closing below 1871, we came in this week a little bit bearish. Okay, so this identifies for us the average price tells us, and depending on where the market closes at on Friday of that week, it tells us the sentiment coming into the following week. And in this case, for this week, it's a little bit bearish. And we're going to take a look basically at the real action that took place this week and compare it to this prospective report that is published every Saturday to all of our subscribers. With the market closing below the weekly price momentum indicator of 1871, obviously it confirms that the price momentum is bearish. But if it closes above it, it would negate this bearish signal to neutral. So now we have another pivot point that we're watching, 1871, to turn the trend to neutral to bullish. The 9-day moving average of 1968, a close above it will turn it bullish. And now let's take a look at the weekly price indicator that identifies for us the extreme above the mean or the extreme below the mean. In this case, if it closes below 1871, and obviously the market closing on Friday came in a little bit bearish, the sentiment is bearish, but it tells you that if we come down to the levels here of 1703 to 1612, that you want to cover basically those levels. You want to cover those short positions. And at the same time, it tells you that if it comes down to 1703, that you want to go long on a weekly reversal stop, and it tells you exactly where your stop should be if 1703 is triggered. And your stop is 1612. At the same time, if we close above the 1871, then the weekly trend will turn bullish, and the target now is activated at the extreme above the mean or the average price of 1871, in this case being 1962 to 2130. Now let's take a look at the TradeStation 15-minute and daily algorithm that we have running and basically see what they're telling us right now. Let me add here the analysis technique, which is the variable changing price momentum indicator, and it will give us a very, very good idea of potentially where we are in here. As you can see here, the market from the B1 level on the intraday has been recommending to buy the market from the B1 level. And this confirms basically that the market has come down to a very good and ideal buying level here that represents the 1612 to 1702 level, based on the report that we published here this weekend. And the market has been able to come down to about 17, what appears to be about 1740, 1735 in that vicinity. Not quite down to the low here. We're looking at a low of about let me take a look and see here. About 1728, I think, in that vicinity, 1730 in that vicinity. So we didn't quite come down yet to activate the 1702 on the weekly, but we have pretty much, I think, established, particularly in the gold market, what appears to be a level of support, so that we can identify either the market activating a buy signal at 1702 or closing above 1871, okay, which would be the other side of the coin of the reversion to the mean. A close above 1871 would activate a target of 1962 to 2130. We're trading last at 1866 with a high of 1879. So once again, a close above 1871 in JNUG would activate a short-term signal. So we're getting now the validation of the intermediate to short-term aspects of the market in JNUG, and when you put all of the elements together, it appears that we have a buy signal as well on the weekly charts by closing above 1871 with a target of 1962 to 2130.